$250 billion for Elon to buy a company from himself.
It's not a gimmick, Nate. The filings show SpaceX is genuinely desperate for XAI's compute infrastructure.
Oh, come on. You don't think there's an ego premium priced into $250 billion?
Probably, but it just pushed Q1 deal value past 1.2 trillion.
Only for mega deals. The rest of the market is completely starving.
Which is exactly why we need to look at who's actually closing deals underneath this AI noise. The rundown. Volume is down 17%, but deal value is up 26%. We're staring at a textbook K-shaped market.
$1.2 trillion in Q1 alone. The mega deals are carrying the entire class right now, while everyone else is stuck in valuation purgatory.
Exactly. Though we did get a few mid-market scraps today. Merit Medical just bought Viewpoint Medical for $140 million.
Classic bolt-on.
A very smart bolt-on. They're expanding their interventional radiology footprint. I actually respect the discipline here. No forced AI synergies, no ridiculous revenue projections. Just a clean, strategic land grab for catheters.
Meanwhile, Apollo is playing hot potato in the energy sector. They just handed Sapphire Gas Solutions over to Antin Infrastructure Partners.
Handed over? Sapphire does compress natural gas. Why exit that right now?
Because Apollo knows how to read a geopolitical map, Maya. The chatter across every trading desk today is about the Middle East. If tensions spike energy prices, financing for the next wave of mid-market deals completely evaporates. Apollo is cashing out while the multiples still look sane.
Oh, come on. You're giving them way too much credit for macro forecasting. Apollo just hit their hold period and wanted the liquidity. The mid-market financing freeze isn't some future threat. It's already here. That's exactly why transaction volume dropped 17%.
I'm just saying, taking chips off the table before energy goes crazy is a classic banker move.
Sure, Nate. We also had two other quiet ones today. Shionogi bought out all the global rights to the ALS treatment Radicava from Tanabe Pharma.
Clean IP consolidation. I like it.
And GDC IT Solutions picked up global help desk services to expand internationally.
Which officially wins the award for the most boring press release of the quarter.
Hey, someone has to fix the enterprise routers.
True, but nobody's looking at help desk acquisitions today. Not when the biggest deal of the decade just dropped.
You mean the $250 billion elephant in the room?
$250 billion. Elon Musk is essentially buying his own company, merging SpaceX and XAI.
I spent my entire morning digging through the preliminary filings, and the structural gymnastics they're using to justify this valuation are absolutely wild. The big one,
$250 billion. For a second, I thought my terminal was broken.
I actually checked the SEC filing 3 times to make sure it wasn't a typo. SpaceX buying XAI for $250 billion. I just keep saying it out loud to see if it makes sense. It doesn't.
Oh, come on, Maya. Look at the big picture. We're talking about merging the ultimate hardware infrastructure with top-tier artificial intelligence. You put Grok brains into Starlink satellites, you basically build Skynet. From a narrative standpoint, it's a banker's dream.
Nate, please stop. Take off the banker hat. It's Elon buying Elon. The corporate governance alone is a nightmare. Who even wrote the fairness opinion on this?
I would love to see the fees on that fairness opinion, honestly.
Right? But look at the valuation. $250 billion. What are the actual revenues of XAI right now? It's totally opaque. This feels like a massive shell game to consolidate his empire under the SpaceX umbrella, because it's the only entity with the valuation gravity to absorb it.
See, I disagree. I think it's actually a genius defensive move.
Defensive? Against who? Himself?
Against the capital markets. Look at the Q1 data. Global M&A deal value just crossed $1.2 trillion. That's a 26% year-over-year jump. But transaction volume actually dropped 17%.
The classic K-shaped market.
Exactly. The mega caps are eating everything, and everyone else is starving. By merging XAI into SpaceX, he creates an absolute behemoth that never has to worry about the public markets again. He controls the compute, the energy, and the orbital delivery system.
Okay, I'll give you the compute and delivery argument. but it still feels like a backdoor way to fund XAI's massive capital burn without having to do another external funding round. You bury the AI compute costs in SpaceX's launch margins. I read through the footnotes on the preliminary proxy, and the voting structure is basically just a rubber stamp.
Well, yeah, corporate theater at its finest. But you can't deny the gravity of it. It single-handedly warped the Q1 numbers.
It did, and it masks a lot of pain underneath. The well-capitalized buyers are throwing around billions, but mid-market dealmakers are sweating right now. I was talking to a sponsor yesterday who is terrified about Middle East tensions spiking energy prices.
Oh, absolutely. The geopolitical volatility is the elephant in the room. If energy spikes and debt gets more expensive, the mid-market financing dries up completely.
Which is why everyone is rushing to get deals done now before the window closes. Speaking of rushing to the finish line, did you see what's happening in the medtech space today?
You mean the Merit medical deal?
Exactly. $140 million for Viewpoint Medical. Smaller numbers, but honestly, a much cleaner strategic fit. Voices.
I read the morning notes and the consensus is calling this a K-shaped M&A market. Well-capitalized buyers are throwing billions around while everyone else is suffocating from valuation constraints.
I hate that term. K-shaped. It's just lazy geometry. Look at the actual Q1 data. Global transaction volume dropped 17%, but deal value spiked 26% to over $1.2 trillion. That's not a K. That's a barbell where one side is entirely made of AI hype.
Hey, don't disrespect the K. But you're right about the barbell, especially when a massive chunk of that 1.2 trillion is literally just Elon Musk buying his own company.
Right. SpaceX acquiring XAI for $250 billion. The footnotes on this are going to be a masterclass in corporate theater. It's an internal transfer of wealth disguised as a megadeal.
Spoken like a true skeptic. But my old banker buddies are actually sweating right now. They're whispering about the Middle East tensions. If geopolitical volatility spikes energy prices, financing for the entire mid-market is going to freeze solid.
Good. Maybe that forces some discipline. Look at Merit Medical. They just quietly bought Viewpoint Medical for $140 million to expand their radiology footprint. Real cash, real synergies, zero billionaires playing shell games.
Oh, come on. 140 million? That's the catering budget for the SpaceX deal. You can't tell me the Merit deal is what moves the needle right now. AI is the only thing keeping bankers employed.
I'm just saying, I prefer deals where the buyer and seller aren't the same guy texting himself. But we'll see if this mega deal momentum holds up. Tomorrow we're watching whether the DOJ actually tries to block these massive AI combinations, and if private equity finally starts taking undervalued public tech companies private. Spill the tea.
I just want to be a fly on the wall for that board meeting.
Which board? SpaceX or XAI? Because I'm pretty sure it is just Elon talking to himself in a mirror.
Exactly, moving $250 billion from the left pocket to the right pocket. But you have to admit, as corporate theater goes, it is an absolute masterpiece.
Masterpiece is a strong word for a governance nightmare. I read the filings, Nate. The justification is all about synergizing artificial general intelligence with multiplanetary logistics. It reads like a late-night sci-fi pitch, not a fairness opinion.
Oh, come on, Maya. It makes perfect strategic sense. He is building a closed ecosystem. You need massive compute to run the rockets, and you need the space infrastructure to justify the AI spend. It is the ultimate vertical integration play.
I completely disagree. It is a bailout of XAI's massive capital needs disguised as a strategic merger. Look at the actual Q1 data. Overall deal volume is down 17%. The mid-market is practically frozen. The only reason global deal value hit $1.2 trillion is because a few mega-cap players are forcing these massive transactions through.
The classic K-shaped market, the big get bigger and the middle tier gets left on red by their private credit lenders.
Exactly. And my inbox is full of mid-market bankers absolutely sweating right now.
Because of the Middle East whispers?
Yes, the rumor mill is on overdrive. Everyone is terrified that geopolitical volatility is going to spike energy prices right when debt was finally supposed to get cheaper.
It is brutal out there. You have Apollo tossing Sapphire Gas Solutions over to Antin, But meanwhile, you cannot get a basic $50 million software buyout financed without giving up your firstborn.
The financing market is completely bifurcated, which is exactly why the regulators are going to have an absolute field day with this SpaceX deal.
Speaking of regulatory nightmares, we need to talk about what kind of antitrust pushback is coming for these AI rollups tomorrow. Tomorrow's radar. Tomorrow morning, we get the early Q2 filings. Everyone wants to see if this $1.2 trillion Q1 momentum actually holds up.
I'm already hitting refresh on the SEC portal. But Nate, you're blinded by the giant numbers. Deal value is up, sure, but volume dropped 17%.
Because SpaceX buying xAI for $250 billion completely skews the math. It's a K-shaped market. Mega cap buyers feast while the mid-market starves.
Starves? Oh, come on. Private equity isn't starving. They're just cheap. They're circling undervalued public companies right now waiting for the right entry point.
Maybe, but debt markets are twitchy. Wall Street is terrified that Middle East tensions will spike energy prices and derail mid-market financing altogether.
Which is exactly why tomorrow is critical. I'm watching for regulatory pushback on these AI megadeals. The FTC has to be waking up.
Speaking of regulatory headaches, wait until you hear the antitrust angle on Merit Medical's new acquisition.